Hello everyone and welcome back to my channel. In one of my previous videos, I shared my personal trading strategy. This strategy covers everything from finding the market buys, how to confirm the buys, executing trades, where to place your stop loss and what to target. Today I'm going to break down a trade that I took on the DAX using this exact strategy. I believe this is the best way to understand it by showing you real trades as proof. So if you are interested in that, then stick around till the end, drop a like and subscribe to the channel so you won't miss any upcoming videos. And let's just get started. First thing first, let's start with executions, right? So as you can see, I shared this on my Twitter account. I entered here, exited here for 2 hours. And as you can see, absolutely no drawdown, zero drawdown, straight to my TP. And here's executions. I entered here, exited here. So now let's start with analysis and how I applied my strategy that I have shared with you previously to this trade idea. So as I told you before, we start from the weekly and the daily for buys. That's our time frames for buys. And we want to see either from external range liquidity to internal range liquidity, or from internal range liquidity to external range liquidity. External liquidity is this swing highs and swing lows. So after price rates on external liquidity, like swing highs or swing lows, our next target is the opposing internal range liquidity, which is represented in fair value gaps. So starting with the weekly, as you can see, we have rated on this external range liquidity. After price rates on external liquidity, we want to see return to internal range liquidity, and we have that here. So we have this fair value gap right here. Now price, after taking this external liquidity, we have touched this fair value gap, but I wasn't convinced and I was looking for a deeper retracement to it. So I'm still bearish on the weekly to take this fair value gap right here to dig deeper. So our weekly bias is bearish. Now let's go to the daily and see what's going on. So on the daily, when I opened my chart, price was here, and I noticed that we are on here on order block. And as you can see, we have a market structure shift above us, so we can see that clearly. And the daily is confirming our bias of going to here, this fair value gap right here. So it is changing the order flow, and we have also taken this external range liquidity right here, returning to what? Fair value gap, internal range liquidity, right? And then we have another break of structure, returning to premium order block. So we are in deep premium, and now we expect that move to this fair value gap right here. So after confirming our buys in the daily time frame, we go to the lower time frames and tries to find an entry. So the next optimal time frame after the daily, I believe, is the 1 hour time frame. That's based on my journal. So on the 1 hour, what do we have? We can see that we have filled that order block right here, right? We touch that order block to the consequent acknowledgement of it, or the mean threshold, so 50% of that order block. And what do we have next on the 1 hour? A market structure shift. As you can see here, the body closing below this swing, this recent swing, and returning to what? Fair value gap. So let's draw that here. Right, so now the weekly is bearish, the daily is confirming our weekly buys, and also the 1 hour is bearish. So we wait time frame by time frame to align with each other, and you can't skip time frames, guys. You can just go from the weekly to the 1 hour. That doesn't work. As you can see here, if you can see here that if you skip time frames and went straight to the 1 hour, you can see that this market structure shift is fake and price violated that. So we wait for that retracement to daily PDRA, right? And then only then we wait for a market structure shift, and then we zoom in to the next time frame to look for entries. So after price retracing to this fair value gap, you can easily enter from here, your stop loss above here, this candle right here, no need to put it here, and you can target this filled swing side here, as you can see. So filled swings is low resistance liquidity. When you see this kind of swings below you, you know that price will explode to the downside like this. You can expect this move right here. It happens all the time when you have filled swings right here, meaning that there is a lot of liquidity below them. So I didn't enter from the 1 hour. I went one more time frame, which is the 15-minute chart. So after price retrace to that 1 hour fair value gap, we have another market structure shift on the 15-minute chart. So we have the weekly, the daily, the 1 hour, and the 15-minute are all bearish. So I entered from here, right, from this fair value gap, and my TP was around here, I guess, for 2 hours. And that is basically it, guys. That's it. You go from the weekly or the daily for buys, and then you go to the 1 hour time frames to look for confirmation of that buys, and then the execution time frame, which is the 50-minute or the 5-minute. So to summarize, we use internal and external range liquidity to frame our buys and targeting. We used low resistance and high resistance liquidity. So highest liquidity is here. As you can see, price is constantly taking liquidity and then reject. And then we have filled swings here to target. And that's it. That's all you need to take trades, high probability trades. So I believe we have come to the end of this video. If you have any questions, please DM me in my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.